So thank you. So today's topic is about markets and you, and I've explained to you what are the different components for your success in trading, and the most important component, and where the traders um, lack or they pay attention to, and where they are supposed to pay attention. So I will explain in this 1 hour session. So always keep this slide in front and explain to you about the comfort zone. So we live in the comfort zone, and the breakthrough is beyond our comfort zone. And I explained to you that at 3:15 or 3:30 today, I was just reading books, relaxing in my bedroom, and then suddenly I said, no, I need to really teach. I have the presentation. I can create some more slides, combine something, and I can teach. So I started sending you message at 3:15, 3:30. So I went out of my little comfort zone because I feel good in teaching, and I'm here. I am, and here you are. So who benefits the most when he's teaching? I'm the one, the teacher. I'm the most. Uh, I'm the first person who is learning the most out of all this teaching I'm doing. So, and this, and then comes you. So, in today's teaching, I went beyond my comfort zone. I got up my bed. I decided that what topic I need to teach, and I took some slides from different presentations. I have different content combined and created this presentation. So here I am, and I started sending you, bombarding you emails that, hey, come and attend. So after I finish this teaching, I will learn more. Something will click in my brain. Aha moment will come, and then I will go and do something else related to the trading and improve myself. So that's what it's about. So I suggest you continuously come. This is another slide I show that this pie chart, which I got from the internet, that 11.5% traders are successful, and 18.5% are break-even traders in 3 years of data. So this is 3 years of, based on 3 years of data, that 11.5% are successful traders, 18.5 are break-even traders, and 70% are the failed traders. So there is a difference between, there's a little tweaking needed uh, between 18.5% to 11.5%. So these guys who are 11.5%, they're doing something different than these guys who are doing those who fall into 18.5%. And there's a big difference between the 70% guys and 18.5%. So there's a big gap. So if these 18.5% can tweak themselves, learn, they will come into this pie of 11.5%, so 30%. And then out of 11.5%, only 1% are top traders, those who make millions. Maybe they're making millions every day. The money is no problem. They turn on, if the computer is like a money making machine, ATM, money start falling. So the only 1% of those traders are there. So money just keep pouring in, and they don't even know where to spend. So that kind of trader. So it's not like it's not possible. So something which is impossible can be possible. Here are some of the trades. So I'm giving you this example of, I just listed, I went through my list, opened the Telegram, and I said, oh, hey, what are the trades that we recently did? So these are not in alphabetical orders, and I did not mention which are calls and which are puts. So this is a mixed bag. So Boeing, NTES, Coin, PDD, Riot, Spot, KSS, these are some of the trades which we closed today, just today, not BA, but NTES, Coin, PDD, Riot, some half Spot, KSS, and then there are other trades. So these are calls and puts trades, mixed bag. So I know which one are calls and which are put, I can tell you. But so the reason I'm mentioning you the calls and puts, this market is goes up one day and goes down one day. So it's kind of mixed market. And if you ask someone, they will say it's bearish or is downtrending, is very negative. So that's true. Then the market is bearish downtrending, and the bias is tilted towards to the downside. But how come in the same market, we are trading calls, and those stocks are just going crazy? Just pull the chart of NTES, put it on your daily chart, and see what happened yesterday. We went long on NTES yesterday. So what happened? Coin. So look at this. PDD, a Chinese retailer, right? Spot. So what is in the same market? The stocks are moving up crazy, and some stocks which are going down. I have not listed oil stocks here where we traded puts, so they are not listed here. So it's a mixed bag, calls and puts in the same market. So I'm the same one person trying to find the stocks which are um, setting up. So I'm not so I'm putting a hat. I'm at the same time, the same moment, I'm putting a different hat. I'm trading on the long side, I'm trading on the short side. So I'm flipping my charts on the long side and on the short side. So 1%. So think about that. This is another chart I got somewhere. This is a big topic I'm working on. The presentation is about the responsibility. So there's something called over responsibility, something's called under responsibility, and then the balance. So the more responsible we are, the more successful we are. So the traders don't realize it, uh, how much this word is the key word, responsibility. And yesterday I held a session for 1 hour and 45 minutes. It's uploaded on a YouTube channel called The Real Trade Genie. It's about the cause and effect. So the traders are not even don't even understand the concept of cause and effect, and I did not understood either. I didn't understand till I dig deep into the topic, and I did some research, and I found out there are various kinds of cause and effect, and the traders don't even know. So so give you some examples. The linear cause, there's something called no cause causation. So traders don't even understand there is something called something is causing something. So they don't understand. There is a linear cause effect. There is a complex cause effect. There's a personal cause effect. There's external cause effect. There is a magical cause effect. So many cause and effect traders are bringing in their trading, and they don't understand what kind of a cause and effect they're bringing in their trading. So go and if you want, you can watch that video on YouTube, The Real Trade Genie. It's posted yesterday. It's about market trading performance and cause and effect. Now, if we analyze the most important factor, so I will break it down. I'll give you some stats, some percentage, some analysis. The most important factor in trading is you. So it's written in big letter U. So everything is coming from you. The same trade, same market, different traders are getting a different result. So what is happening? It's because I am Noshi, you are you, and there is someone else, Robert, John, Paul, Steve, Nathan, millions of traders. So different traders, only one you. So only one you. So in order to, if we understand the most important factor in trading is you, so the best traders, they are performing self-analysis unconsciously. So this is very important, the self-analysis. So this is again other big topic, and you need to pay attention to this topic. So do some research, get some books, get some help, go on YouTube, maybe go on Amazon, Audible, etc., and work in this areas of self-analysis. So since I became aware of this, I'm constantly um, doing my self-analysis at any moment, how I'm feeling, what I'm thinking, what I'm hearing, and how I'm acting, and how I'm communicating, how I'm trading, what's my posture, what else is going on in my life, what will come in my life. So all that, and nothing in this world is permanent. So everything is just temporary. If you uh, if you rewind, if you fast forward something like on a traffic, they show fast forward, there were millions of people just moving, crossing from one intersection to another one, and moving, driving. The 4 o'clock, the what is it, garage. So I used to do that, open the garage, come outside, start driving, go to office, do a bunch of things, and then start driving, come home, close the garage, go home, sleep. So that's what. So during this whole period, you need to analyze yourself what you have been doing. So they say that you can be on top 11% if you do 11 self-analysis consciously. So if you do self-analysis consciously, we can we as a trader can be on 11.5%. We can create wealth, and then so if we do that, then on in 11.5%, there is only 1%. They make millions and millions every day. They don't even know how much money they are making. So top 11%. So the most important factor is you. So if we create a chart of you, so this is you, and imagine it's you, and you can, I'll try to prepare a chart where I can draw some arrows. Who is affecting you? So the surrounding you, there are a lot of factors, a lot of variables is affecting you on a daily basis at every moment. And so right now I've turned off my phone. If I don't turn it off, I know somebody uh, will break my thought. Somebody will send me an email, somebody will text me, somebody will call me. So my phone is hopefully is off. So who is affecting me? Mostly it's me. I'm affecting myself. And who who is me? So my shadow parts, my role models in my mind, my perfectionist part, my researcher part, my trader part, my investor part, my dad part, being a dad, being a husband, being a son, brother. All this is affecting me right now. The community I belong, uh, things like that. I'm talking to you right now, so I mean, you as the audience affecting me, and I'm affecting you. So you getting affected from so many external environment, and then inside of you, your family members, and internal you, your shadow parts. So think about that, all your financial objectives, what you dream of, your purpose, your why. So many. I can draw a little like a cloud and throw the arrows here. So you're getting bombarded, you're getting affected by so many different directions. So think about that. Now, uh, this is another area which is very big, and I'm constantly aware of that our beliefs. So it's you have been composed of uh, since I was born in a small tiny town where everybody knows everybody, and then I moved to another city, then another city, and I migrated from one country to another, then another, then finally I ended up in America, then I ended up somewhere, then I said, okay, I will come to California and I will live in San Diego or San Francisco, something like that. So all these things, my friend, my relative, etc., my religion, all of them made me who I am. So I formed beliefs. So my beliefs are different than your beliefs. So it could be completely, totally, on a different, what is it called, continuum. On one pole, here I am, and on the other side is you. So imagine your beliefs. So you bring your beliefs into the market also. So you have your identity belief, who you are. You have your spiritual belief. You have your environmental belief. You have your own capability beliefs. Your values, etc. What you think about the market and what you're trying to achieve. So all your beliefs you're bringing it into the market every day. And every day, some beliefs are useful and some beliefs are just garbage. So we need to constantly evaluate what is garbage and what is useful. Why I think like that, why I'm thinking like that. So some of the example is your beliefs. When you are trading in the market, you say, I'm sure that candle is telling me something. So there is a candle which has open, high, low, and close, and you look at it and then you say, okay, this candle is telling me that this market is going up. So think about that candle, which is on a 5-minute chart. If you dissect that candle during that 5-minute chart, you can dissect that candle into 1-minute chart. So you can have 1-minute chart, 5 1-minute chart, five 1-minute candles. So think about that, 5 1-minute candles. You just dissected 5-minute chart into 1-minute chart. Now, in that 1-minute chart, millions of transactions happen on the buy side and on the sell side. So many transactions. So now you can dissect that candle. You can start putting a dot for each transaction on a blackboard or on a whiteboard. Ding 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 here. This so many dots, and then there will be an open price, and then there will be a close price, there will be a high price and low price. So you say, okay, all these transactions, they come and form this 1 minute chart, and then here I go on the 2nd minute chart, then here I go on a 3rd minute, 4th, 5, and then compose the 5 minute chart. And you take all that 5 minute chart, there are 390 minutes, it creates a candle for that day. So then we say, okay, I'm gonna make it a white candle. If the close is higher than the open, I make it a white color, because I believe the white color is the color for bullishness. Or I make it a green color, because green represents bullishness, a white color represents bullishness. If you are in China, then you say, are you serious? Here we represent bullishness with the red color. So I'm going to color that candle with the red color. So if you're looking at the same candle, um, uh, if you're looking at one candle, if you live in America, if you see a white candle, you will say this is bullish. But then I will say, no, this is a red candle. Uh, I just told my trading platform to, whenever the close is lower than the open, make it white color. So just like my son, one day he took a piece of paper, and he was learning drawing. He took a piece of paper, and then he grabbed my pen and he drew one thing, circles round and round and round and round and round on the paper. And then he said, okay, Daddy, tell me what is it? I said, looks to me a dog. So he said, no, this is a cat. So I said, okay. And then he said, okay, tell me what I'm drawing right now. So he drawn, and he drew something on a piece of paper. And then he said, okay, tell me, what is this? I said, this is cat. He said, no, this is a dog. So he gave that a drawing, a meaning, the name, what he thinks. So what I was thinking was not correct. It was not a dog, it was a cat. So same way, you bringing your belief in the market every day. All the traders are bringing them their beliefs in the market. You're thinking, I'm sure a stochastic is giving me sold out reading. So you, based on the stochastic, you say, okay, this is a sold out and the market must go up. So you go and buy, when go long. I'm sure this moving average will hold. So there's a line you draw, you give it an you set some, let's say 20-day moving average. So you draw 20-day moving from the drop down, you say 20-day moving average. This stock is holding this 20-day moving average, and then it doesn't hold, it goes down. Then you say, no, 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 it's not a 20-day, I wrong, I need to set it for 22-day moving average. Then you set it up for 22 moving average. Then you say, no, this is not holding, let me change it to exponential moving average. So from the drop down, you say, okay, it's not a simple moving average, let me put some exponential moving average, and then 22 exponential moving average, and then it starts to hold. And then you say, here you go, 22-day exponential moving average is the average. So, and then tomorrow, what happened? 22-day exponential moving average doesn't work. And then you go and find some other moving average. So there are 365 days in the year. There are 365 days moving average, and there are simple moving average, exponential moving average, adaptive moving average, exponential moving average, weighted moving average. So many moving averages. So you're bringing your beliefs about the moving average. So think about that what you are doing. So as long as something is working, it's fine. But behind, you need to remind yourself what you're trying to do. You have a belief, I think market will tank soon, so you go and sell everything. All the your holding you have, you sell, because you bring a belief in the market that market will tank soon. You heard it on some Facebook or on some news, or some guru send you this is scary newsletter that market will tank soon because the war broke out in Middle East. So sell everything. So go in cash, and then after 2 days everything is rising and sharply rising, and you're wondering what happened. I'm sure market is telling me something. So you're trying to bring something in the market. I'm sure something is going on. This market is telling me something. I need to go long. I need to go short, or I need to stay in cash. Whatever is your belief. I'm more successful in downtrending market. So you bring this. Belief in the market that I'm only successful in downtrending market. So downtrending market is temporary, doesn't stay long. So if you do the study, you will find that the downtrending market doesn't stay long and it's sharp and volatile. You have to be very nimble, very agile in trading in the downtrending market. And even in the downtrending market, there's something which is going up. So some sector, some industry group is really moving up. Maybe just Chinese stocks are going up in a downtrending market. Baba, Baidu, you look at NTEL, you look at PDD, and then you look at JD, and JD is not moving, is about to move. So you say, okay, you're ignoring all that. Maybe the technology stock is moving up. So you're ignoring all that technology stock. You're focusing on a downtrending market. So you keep focusing on a downtrending market. A lot of stocks are just sold out, way sold, oversold, and you're trying to make money in oversold stock, and they are ready to bounce upward. So you forgot to trade on the upside. I'm sure T-bills are going to have a major correction shortly. So you're just believing T-bills. T-bill market is $1 trillion market. Not people don't experts who have done PhD all their life and all the resources. They cannot even predict which way the T-bills will go. And here you are with a little knowledge about the market and trying to figure it out. T-bills are going to have a major correction. So it's good to know. So it's good to know what the candle is telling me. Maybe it's right. Good to have a technical analysis knowledge. Good to know about the moving average. Good to know about the market analysis. Um, uh, it's good to understand the T-bills, T-notes, bond, and all the currency and the crude oil and the gold and how the different factors are affecting. But we 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 know all that and trying to understand, but knowing that on one corner of the mind that we may be biased, we may be bringing our beliefs into it, and the market is telling us something. So this is one chart. Um, this is another one, a big topic about the biases. So we bring tons and tons of biases. So one of the bias is called attribution bias. So here is the chart. So I try to explain. So here I am, right? Me, big me. Um, Lived in 4 countries, lived in several cities, big cities and small cities and villages, and among cousins and brothers and friends and college and all that, travel, work, and I created a lot of my beliefs inside. So I come to the market with some belief, and then what I do, I come to the market and I open an account somewhere, maybe on a Robinhood, and put some $2,000, and I bet. I put a bet. So out of 2,000, I put some money in that trade, and I bet, and the outcome came out. So the outcome came out, and it was so for me. When I started, I put the first trade I put was a Joe, a symbol named Joe. I have to see if that Joe exists or not. So really, name was Joe, and I made $70. Out of $70, I gave a $30 as a commission to Option Express, and I made net $40. And I thought, I am a champion. I can do it. So outcome was positive. So I assigned it to my skill. And the skill I acquired was just 2 days ago. I bought this software, plugged it in, as the guru told me, look for this angle. I look at that angle, and he was right. I made the money, $70, and out of 70, I gave 30 to commission, and 40 my balance went up to $2,040. So $2,040. Then I put another bet. This time I made a bigger bet, something bigger, and I don't know what happened. I know the outcome. In 1 month I lost that $2,000. So the result was loser. So the result was loser. I assign it to the luck, external factors, all the external factors I can blame. I blame it to the software. I blame it to the broker. I blame it to all the things I can blame. So I blamed it on that. So I didn't do anything here. Did not learn anything. and then I put another bet. Yes, I made some money, and then in 1 month I wiped out my $2,000 account. So this is the loop we go through. So now, instead of understanding about the market, I was assigning my result, my outcome, to some external factors. So after me, the next big thing is to understand the market. So you will, and even your spouse don't understand you don't understand you. So your spouse says or wife says, I don't understand you. Why are you doing like that? Or even a simple driving. I'm driving, and then she says, I don't understand why you are not following GPS, why you don't listen to GPS. So I said, I know, I am sure GPS is wrong. I will just watch me. I will take you faster. And then the result is that I'm lost. I'm 45 minutes late. I'm lost. So there's a lot of thing going on in my head, and I think I'm the champion. So no, I'm not. I just better just listen to GPS and follow it. She knows what she's doing. So you see, I assigned GPS she instead of he. So I assigned it to a she GPS, not he. So think about that. So market, after me, the next important thing is to understand the market. So this is where we really, really need to focus, like devote the most of the time in understanding what the market is telling us. So market can be going up, market can be bullish, market can be bearish. So there is a bear market, there is a bull market. So we understand this is a big market, bull market, bear market. But as a short-term trader, we need to know whether the market is downtrending or uptrending or sideways. So you can divide this market into three different categories: downtrending, uptrending, and sideways. Now, the further you can do the analysis, and you can say, okay, the major trend is to the downside. So some way of evaluating the market. So you have to do this analysis and understand the major trend, which is a bigger trend based on the weekly chart or based on the monthly chart, that the major trend is to the downside. Then there could be an intermediate trend based on your weekly charts. Then you say, okay, the major trend is to the downside, the intermediate trend is to the upside, and now what the minor trend, which could be as short as 2 days or 3 days, what the minor trend is doing. Minor trend is to the downside. So you see, the minor trend is to the downside, the intermediate trend is to the upside, the major trend is to the downside. So there is a mixed market. The market is not in harmony. So when the market is like that, there is a choppiness in the market, there's a volatility in market, because the different cycles going on. There's a minor cycle going on, there's an intermediate cycle going on, and there's a major cycle going on. So every day you need to spend time in analyzing these cycles. Once you understand these cycles, where the market is, and there's more. So I used to do that based on so I started. Uh, so there's a different way of analyzing this. There's a top-down analysis, and then there is a bottom-up analysis. So the top-down analysis, you can study all the indices, the major indices, the Nasdaq 100. So I focus on Nasdaq 100, the Russell 2000, the Dow Jones 30, and then S&P. So you can do the top-down analysis and figure it out what the market is telling you, or you can do the bottom-up analysis, which is analyze these components in the market. So Dow Jones have 30 components. Go through those 30 components and understand where they are in terms of the cycle. Then you take the Nasdaq 100 stocks, the top 100, those 100 stocks, and then you analyze it. So analyze each, and then come up with your outcome, where that Nasdaq 100 is. The same way Russell 2000. So Russell 2000 is meaning 2000 stock. So it's very hard to analyze the Russell 2000. Think about that. Then you are analyzing S&P 500. So the S&P 500 is stock. So you see 500 there, 2000 there, so 2500, then 100 is stock in Nasdaq, 2600, then 30 stocks in Dow Jones. So 2630 stocks just to analyze these. So that's a bottom-up approach. So there's some way of analyzing it. So do you have the capability to analyze 2630 stocks? Or you can do the top-down analysis, which is just analyze the indices. So I used to do this on my Excel worksheet every day, spend some time. Then I started programming it. So the programming is done 2, 3 years ago. Now I every day in at night, uh, the algo runs, the data is fed, and comes the result. So every day I know about the situation of the market, what happened, of course, what happened yesterday and what happened during the last 1 week or 1 month. I don't know what will happen today when the market opens. So I have a service on the market, and I sometimes I receive this email, and the people say, "Hey, you telling me that the market was downtrending yesterday, but you didn't tell me what the market will do today." So they are looking for that crystal ball, what the market will do today. So my response is, I don't know. When the market will open, I'll find out. But right now, looks like the market is trending to the downside. This is the support level. These are the resistance level. These are the conditions of the stock. So I know because I spend time in the evening preparing for the next day. So the point is, it's very important for you to know about the market. So it's important for you to know about you, then it's very important to know about the market. So go spend the time on the market, subscribe to something, look for, if you know, if you come up with something, please share that market analysis is top notch. So the market analysis is top notch, and not only the market analysis, but the sectors, the industry groups, and then not only the industry group, but what are the top stocks in that industry group which are moving the market. So not only you're analyzing yourself, you're analyzing the market, then you're analyzing the sectors, then industry groups, and then the stocks which are in that industry groups, and you know where they stand. So you do that. After you do all that, now comes the technical part. So the technical part is called trading system. So this is where people either go and buy some black box, or they spend time in learning. So it could be a trend following system, it could be a um, band following system, it could be support and resistance, it could be breakout, reversal, gap up, gap down, moving average breakout. So I have a different presentation, is on my YouTube channel, Real Trade Genie. I've explained to you, there are about 13 I have listed and explained to you in brief in 1.5 hours. So you can spend time in learning which suits you. So again, if the system which suits you may not suit me. So for instance, the band system, where the market is moving in a sideways, it goes up and then it comes down, it goes up, and people say, okay, it's touching that line, I'm gonna go short. And when it comes and touch the bottom line, I'm gonna close my short position. I'm going to reverse my long position. And then they put bunch of moving averages on it and combine it some indicator, use good. You can combine it with some volume, so use good. So if it suits you, you can do that. So imagine it's you, then there are so many kinds of markets, and then you are using for instance, a chart pattern, maybe a candlestick pattern. So you understand the candlesticks, you understand what is head and shoulder, what is double top, what is double bottom, triple top, triple bottom, wedges and flags and bull flag, bear flag, whatnot. So all kinds of chart patterns you can master, all kind of trend following system you can master. You need to master the volume analysis, whether the volume is a climax volume or a trending volume, and what is the concept of relative volume. You can master opening range breakout, you can master the reversal, support and resistance, and tons of things. And then you come up with yours. You combine everything, a bunch of indicators, you MACD and RSI and stochastics and ADX and DMI, positive, negative, and Arun and moving averages, uh, stochastics, so many indicators. So you're combining all the chart pattern, you're combining all the indicators, the volume, relative volume, opening range breakout, and you create a trading system. So it's your system. And then you test it, back testing, get some data, back test. Now, when you're back testing the trading system, you need to make sure that you are testing this trading system on some kind of a market. So then you go back and you say, okay, I have this, I created this system, and I'm going back to the market for which I have created this trading system. So now you need to analyze the market, go back and analyze and find the period, that period for which period this trading system will suit you. So if you buy a black box from someone, some guru give you an indicator and tells you, buy my $49 indicator and you will make money. So ask that guru that, okay, this $49 indicator, I understand it works. And what kind of market was it? Which period and which stock you traded? What was the kind of market? And who traded this market? So who traded this market? Is it automated? So it means I can just put it on autopilot and start trading. But if answer comes, Albert traded that market. You know, Albert, he's one of my students. He traded and then he made money. So then you say, oh no, I'm John. I'm not Albert. How old is Albert? Albert is 22. Oh no, I'm 52. So you telling me same me, I can take your trading system, black box, and I can trade, and I can trade in the market, this market, and I can put any bet here, any bet. I can believe any beliefs in the market. I grew up in a small village in India. Where did you grow up? And then he said, Albert grew up in New York, next to New York Stock Exchange. So he said, oh, really? So I'm like, Albert, you grew up in New York, and I grew up in a small village in India, and I can trade. How big is the Albert's account? And he says he has $1 million. Oh no, I only have $2,000 account. So you see how many things are variable here. So think about that. So many variables. You market your risk, your portfolio size, your risk appetite, your age, and what else is going on in your life, and all kinds of trading systems, all kinds of chart patterns. So you build a system. Now you need to ask this, that okay, this trading system I built, did I build this for a long market? Did I build this for the short market, for the downturning market? Or is this the trading system I built is for the sideway market? Only works in the sideway market, or this only works in a crude stock, or this only works in a momo stock like Tesla, Apple, and Baba and Baidu. I can, coin or team or something like that, or crowd and cyber, where uh, if the stock starts moving, it moves for 1 or 2 days, and if I enter right there when it started, like 6:35 a.m. And then exit came at 6:56 a.m. So the arrow came at 6:35 a.m. and 6:55 a.m. There was an exit. So you really need to trade between this time period. If I missed it, I missed all the move during the first 1 minute. So the stock jumped from 6:35 to 6:36, only 1 minute. It moved, it spiked, and the volume was huge. And then it just went on a sideways, and then there is an exit. So you exited. So if you were not there, if you were walking the dog during the 6:35 a.m. and 6:36 a.m., you missed that trade. But the guru captured that and said, see, I got this. Here it is, 100% gain. And when you combine it with the option, it goes to 1,000%. So you can just bring open an account, minimum required $500. You come sign up for my system, open an account with $500, pay me $200, and I will make you rich. So think about that. So you build a system, or you borrowing a system from someone, then ask yourself, is it a long system, or is it for sideway, or is it for a downtrending system? So maybe the same system you can apply on the both sides. So good for you. So you have only one visual, you mastered it, and you're applying the same technique, same skills, same everything, whether it's a downtrending market or whether it's an uptrending market. So good for you. So now, once you master all the trading system and you are ready in the market, then different traders have a different strategy. So I may be going long. I find an entry in Apple, and I may be going long in Apple, but here is another trader. And he said, no, I'm not going to buy, buying calls in Apple. I'm going to sell puts. So if they want to, I collect the premium. I am a premium collector. I collect the premium. I have a big account and I collect the premium. I sell puts. And if they assign to me, it's fine with me. I'm willing to hold 5,000 shares of Apple at this price. You know, I'm willing to hold. So different traders are adopting a different strategy. Maybe Apple is giving, let's say, a long signal. So the same, another one trader is going, buying calls in the money. Another trader is buying out of the money calls. One is buying at the money. One is implementing vertical spread. One is selling puts. One is just buying shares and then doing the covered calls. So all kinds of strategies. So think about that. Different traders are applying a different strategy. It's the same trading system, same 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 dot you saw. The result is different. The different traders are applying a different strategy and a different different portfolio size, different skill, different market. All that is different. So when you put together, let's say, market and trading system. So when you put a Venn diagram, so you create a Venn diagram. So market and then take the trading system. So this trading system needs to match that part of the market, whether it's uptrending market or downtrending or sideways market. So this trading system need to match. So your focus is now narrow. Is some area because you design your trading system or your expertise. So trading system is not just think that it's a computerized and thing is your own skill. So think about that trading system is your own skill, the visual. You're a visual person, you can read the charts on a multiple time frame. So your trading system or your expertise, your skill, your competency is suited for that narrow segment of the market. So it could be um, top stocks, it could be a small cap stocks, it could be ETF also. So if I need to put not only what kind of market I'm trading, but what instrument I'm trading. So there should be another pie chart, another chart here, another circle here. What instrument you're trading? Not only the what kind of market, whether it's uptrending market, downtrending market, sideways market, but what sector of the market, what industry group in the market, what symbols in that market. So when you combine, because the same, your expertise may work trading Apple and Tesla, but when you go and try to trade boring stock like AT&T and Verizon and it's not working, you just say, oh no, I can't, my skill doesn't work in reading the Verizon chart or AT&T chart. So think about that. So your focus, you're developing your focus, laser focus on one segment of the market and one kind of a market. So you laser focus. So you develop your skill. Then when you bring a strategy, so when you bring a strategy, uh, so the market is there, and then the trading system is there, and then you put a strategy focus on that. Now you're more laser focused. So you're trading only, let's say, 5 different stocks: Apple, Baba, Baidu, Tesla, Amazon, Nvidia, AMD, Coin, all that big ones. And then you know the market is very liquid. Option market is liquid. The spread is very narrow, and I can get in, get out. So you become a day trader. So you have a market, you have an instrument basket, and you have a skill, and you're applying your strategy, and you became a day trader. So you're just buying 100 shares and getting in and getting out. So think about that. So same trading system, you're applying your what kind of a horizon you have, what kind of a trader are you. So think about that. What kind of trader are you? So your market is there, you are there, trading system is there, your strategy is there. Now, if I bring the you also, so it's now here is you, here's the market, and here's your skill, your trading system or the black box, and then you're applying the trading strategy. So when you combine all that, then this is a very laser focused area, very narrow area. So this is where the money is for you. Whereas the average trader, they are just have no idea about the market, don't know what the system they want to use, or what skill they want to develop, where they focus. They don't understand what kind of a strategy they need to adopt for that market. They don't have the basket of a stock where they mostly they are right. They have a history that they are right in reading these charts. Some stock you can never read them properly. Always a loser. So why bother trading when the history telling you you're always a loser in this stock? It always goes against you. You go long, it goes down. You go down, it goes short. So don't get rid of that. In that stock. Don't need that stock anymore. Or the one which doesn't move. It's like people say watching the paint dry. You don't need that stock. Or the option volume is not there, or open interest is not there, or the wisdom of crowd is not there. There's not many people are participating in that market. Only you are there. Only lonely guy trying to make a trade in that market. So don't do that. Just prepare 100 stock and you will make money every day. So it's you. So there are a lot of things behind you, a lot of things behind market, a lot of trading system. I mentioned 13 of them. Then the long system, then the short system, and the sideways system. And then there are tons of strategies. So laser focus in this area. When you do that, when you combine all that, then that becomes your success. So this is where the success is, in the middle. So now I break it down a little further and give you some percentage so you get some idea that where you are going wrong. And people don't understand that. So key component of successful trading. So key component of successful trading is self-analysis. In this chart, I did not put the risk management. So I should have another circle with the risk management. So next time when I'm teaching, maybe I'll ask my designer to create another circle, put it risk management, and make it another narrow. So this will become narrow part. So the second part of your after self-analysis is risk management. So robust implementation of robust risk management. So the risk management system, or they call position sizing, tells you how much, meaning how much you will be willing to trade per 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 instrument, how much money you're willing to invest. So how much money you are willing to invest in that trade. So how do you come to know that? So the answer is there is something called, which is very important, something called Microsoft Excel. So learn Microsoft Excel or old-fashioned calculator or a notepad. So you don't have to have Excel worksheet knowledge, but if you can, fine. Otherwise, just take a notepad and pen, and the answer should come. So I'll explain to you what you're looking for. So first is self-analysis, knowing yourself. This is a big topic, so keep studying yourself. Then the second topic is the risk management. So the answer is how much. So let me explain to you. And then the third is the trading system, the visuals, the charts, the indicators, the volume analysis, and all the thing, the black box, everything goes in this category, trading system. So the risk management is where the mathematics is, where the financial component is. So how much? So give you example. If you have $100,000 portfolio, let's say. So you say, okay, I have $100,000 portfolio, and on one trade, I'm only willing to lose $1,000. So I'm only willing to lose $1,000 in each trade. So you write it down in your notepad, $100,000 portfolio. This is my financial objective, and I'm willing to lose only $1,000 per trade. So if I'm willing to lose $1,000 per trade, so that is the risk you're taking. So that is the risk component, how much you're willing to lose, not how much you will invest in that trade. So if you come to the trading system, so the trading system, the chart. So let's say you're reading the chart and you say, okay, the Apple is trading at 100, and I will be out if it goes to 95. So you will be willing to lose $5 per unit. So if $5 per unit you're willing to lose, then it means if you're willing to lose 1,000, I should have a example. So I myself I have to think about the thoughts. So if I'm willing to lose $1,000, and per unit, if I'm losing $5, it means I can lose on 200 shares, right? 200 shares, if I'm willing to lose one on per share, if I'm willing to lose $5 and total is $1,000 I'm willing to lose, which means I can only afford to buy 200 shares in that stock. Because when I lose on that $200 on 200 shares, $5 per unit, I will end up losing $1,000. Now comes the question, okay, I'm willing to lose $1,000 and 200 shares I can buy, and the stock is trading at 100, which means 200 multiplied by 100, 200 shares multiplied by 100, I can put $20,000 in that trade. I can put $20,000 in trade. When I put $20,000 in the trade, and when the Apple goes from 100 to 95, I will be out with $1,000 loss. So what if, let's say if I invest more than, if I buy more than 200 shares, if I buy 1,000 shares, so then I'm not following proper risk management. I'm not it's just gambling. I'm doing gambling. So think about that. And if I don't have a way of identifying where is my entry, entry is 100, and the stop loss is 95, and later I buy the 200 shares, fine. But then at 95, it goes at 95, then it goes at 90, then it goes at 85 and 80. So I'm not following my risk management. I decided to lose only 1,000, but I'm not following my rules. So I expanded my stop loss level. So it's the same 200 shares, but then your loss is getting bigger. So think about that. Where, so in other words, your trading system, your skill, your competency is telling you where you will enter and where you will exit, whether at loss or at profit. And the risk management, that little Excel worksheet based on your portfolio size, based on your risk profile, and based on your risk profile. So some traders are, some are like 22-year-olds, so he's willing to lose all. Fine, but there is another person who's 62 and he's not willing to lose all. He's willing to lose only 10 and 15% of the total portfolio at any time, and then he will think again about trading. So different traders, different you, same trading, same symbol. Answer is coming differently. How much? So how much? And then the system is telling you, your expertise, your skill, your black box is telling you where is your entry and where is exit. So keeping these three in mind, then think about that. The expert says that if you assign a percentage of success towards these components, to the three components, so this one, self-analysis is 60%. And the risk management and trading system, when you combine, this is the financial part. This is where the risk control is. So risk management and the trading system, when you stop loss. So think about it, how much you're investing and where is your stop loss. When you combine these two factors, is 40% towards your success. So think about that. Self-control, which is you, 60%. Risk control, which means how much and where, how much you need to invest and where you will exit when you are wrong. That contributes 40% towards your success. So think about that. So if we know 40% is towards the success and 60% is you, then you further divide it. This 40%, I'm dividing this 40% now. So 60% is there, 40% I'm further dividing. So position sizing, which comes from your Excel worksheet, how much to invest in each trade. So $100,000, 1% willing to lose, so $1,000, and then where I will be exiting, I'll be exiting at $5 per unit loss. So always ask the question in per unit, whether it's a contract or whether it's a share or whatever it is 1 unit. So 1 unit, I'm willing to lose $5. So if I am willing to lose $1,000 and per unit I'm losing $5, then it means I can only buy 200 shares. So this cutting losses, this $5 answer is coming from your own, from your skill, the technical skill. So this $5 answer is coming from your technical skills. Where is the entry and where is the stop. So technical analysis is here in number 2, cutting losses. So you see, there is no technical analysis involved in position sizing. This is an Excel worksheet. There is no skill required. You can teach a fifth grader. You can, hey daughter, tell me how much I need to invest. I have this portfolio size and I'm willing to lose 1%. So give me the answer. And the daughter will say, Daddy, you can only lose 1%. And base, so she will ask you, where is your loss? And you say, daughter, per share, per unit, I'm willing to lose $5. So then she will say, Daddy, you can only buy 200 shares. That's it. No more 200. So you see, the answer is very simple to determine how much to invest. But this how much to lose in each trade is your skill. So this is the skill part. Now the third component is also important. Put it here, is stalking the trade. So I will explain to you stalking the trade and how you can reduce this, how this work. So let me complete the next slide and I'll come back, the stalking the trade. So how much answer, when you divide it further, that 40%, the 40% we are talking about the risk control. So that 40%, if you divide that 40% into 2 different components, how much the position sizing, which is your Excel worksheet, which you are asking your daughter to tell you, contributes success 70%. And the other, your skill, your beating the chest, comes contributes only 30%. Look at me, how good I am. I can read the chart. I was sure this candle was telling me that it will go up, and you see it did. So that part is only contributing 30% towards your success for out of that 40%. So think about that. 40% multiplied by 70% is 28%. 40% multiplied by 30% is 12%. So 48%, 40 multiplied by 70 is 28, and 40 multiplied by 30 is 12, 40%. So you see, that's where the 40% comes. 40% of risk control, you divide it further, 70 and 30, so 70% of 40 is 28%. In other words, if you have that little Excel worksheet, your daughter is contributing 28% towards your success. Your reading skills is contributing 12% towards your success. So your daughter is contributing 28%. Your chart reading skill is contributing 12% skill, 12% towards your success. So 12%, 28%, and the 60% is you. So maybe you can say me plus my daughter plus my skill equal 100%. So me is 60%, my daughter contributed 28% towards my success because she can do the math, and 12% is my chart reading skills, the visual. I'm champion. So the traders, they are not focusing on the self-control. They don't have an Excel worksheet or a notepad to contribute to calculate how much they are willing to lose. So they don't have what they don't have, the 60% and the contribution from the daughter 28%. So 60% and 28% is 88%. So 88% they are ignoring it. They are focusing only on 12%. And then they say, I am not successful, because the focus is on 12%. Today I was reading a book, and in the book, the author says that if your daughter comes home with, let's say, 6 subjects, and the teacher gave her A in 1 subject and B in 4 subjects, and C in, or F in the 6th subject. So as a parent, we will say, oh damn, you got F in this subject, daughter, let me hire you a tutor, or let me sit down and teach you. How come you got F? C was okay, but not F. So, but you forgot that she got A in one of the subjects. That's where the focus should have been. That, hey daughter, you did really good in doing this A. How about let's focus on this and make it A plus or A plus plus, and maybe we worry about these 4 B's and make it, out of these 4 B's we try to bring it into B plus and B plus plus, and then maybe A minus and then A plus and A plus plus, and forget about this F subject. You're not meant for that, so it's okay, let it go. So what happened, we focus on that 12%. the category of F. So we focus on that. So now I will explain that chart. So the stalking the trade. So I explained to you how you need to remind yourself during the day when we are trading how to stalk the trade and why we need to stalk the trade, because stalking the trade works in a double as it has a leverage. So you can say stalking the trade have a leverage. So if so, think about that. You're looking at the chart, you're looking at the system, you understand what is going on. So you say, okay, I understand the market. These stocks are moving up today. These stocks are moving up. These stocks are going down. Maybe it's a biotech category and oil category. They are all going down. So I'm watching as a whole sector or industry, and I'm gonna watch the entry in HES for the puts so I can capitalize. So if, or I'm watching entry in Apple for long or Amazon. So think about that. If if you spot that trade at 100 and you go long at 100, it's fine, but your stop loss is set at 95. So $5 per unit loss. So you will buy 200 shares. So that's given. $100 at entry at 100, $95 loss, $5 per share loss, you buy 200. So and then you know your exit will be 110. That is not going to change, but your exit shouldn't change because that's where the resistance is. So you know the resistance is at 111 or 112. So I will exit at 110. That's my exit. So 10-point exit, 5-point loss. Now, so these parameters are set. The target is set at 110. The stop loss is set at 195. It's not going to change. So what is going to change is your entry. So entry could be at 101 if you're late, or it could if you properly stock it and the stock is drifting lower. So you're trying to reduce your entry point towards 95. So you're saying, okay, 99, 98, 97. It will be so good if you 95 is a stop and you go long at 95.50. Imagine that, but it's not going to happen. But at least somewhere, maybe 99.50, maybe 99. So if just for the example's sake, if we go long at 98 90, let's say 97. So let's say 97. If you go long at 97, the target is set at 110. The stop loss is still there, 95. So you reduce your loss per unit $2 because you're entering at 97. Your stop loss is not changing, it's 95, is there. So you now per unit loss is only $2. And if you're willing to lose $1,000, you just raise the number of units, which is shares, to $500, 500 shares. So from 200, you raise it to 500. Think about that. Instead of buying 200 shares, now you can say, I can buy 500 shares because I buy 500 shares. My stop loss is still at 95. I will lose 2 units per share. My loss will be $1,000. I can buy 500 shares, and my target is still at 110. So you're not going to change that. So from 97 to 110 is 13 points. So 13 point multiplied by 500 is what? $6,500. So now you raise your profit to 6,500. Before you were buying 200 shares and you were making 10 points. So you were making only $2,000 profit. So instead of making $2,000 profit, you raise your profit to $6,500. You did not reduce your risk. Your risk is $1,000. You did not reduce your portfolio size. It's still there, 100,000. So your portfolio is still there, 100,000. Your risk of $1,000 is still there. By adopting the stocking process, which is again is a technical, and your expertise comes. So by adopting the stocking process, you raise your profit from 2,000 to 6,500. So you can do the math, what you did. So in other words, you know yourself, so you're paying attention to yourself. You understand. You're paying attention to the risk management, little notebook, Excel worksheet, your daughter, and you master the skills of trading system. So when you combine the self-analysis is 60% and the risk component is 40%. And then when you further break it down, The Excel worksheet is contributing 28% towards your success. Your technical skills, chart reading, and that indicator is contributing 12%. So 60, 28, and 12 combined make it 100%. Now the last few slide is also contributing towards your success, and we fail to understand. So this is called feeling skill. So when you wake up, not every day you wake up super good. If you do, you're blessed. You're not a child. So you grow up, you have a stress. So you maybe you took the wrong bet at nighttime and you watch a movie, you drank, you ate, and all that, and you went to bed late. So there's a night. There's something called night Jerry. Jerry and Jerry Seinfeld, I think they describe about the night Jerry, and they have a morning Jerry. So the morning Jerry wakes up late and all that. His head is spinning, and the reason his head is spinning because what he did at night time, he didn't go to bed early. So whatever is your reason, when you wake up, the moment you wake up, you need to pay attention that how you're feeling. What was your sleep level? Is there any stress? Did you have a bad dream? Did you have enough sleep? So everything you analyze and give a rating. Immediately give some kind of a rating. Mostly you should be rating yourself somewhere 6, 7, and 8. So if you are in a rating yourself 5, so only you know what you can come up. You know, I I try to uh, like I really try to understand, am I in this rating myself at 5? If I'm at 5, if I don't do something good, take care, I may go into the 4 level. So that will be bad for the whole day. And even recognizing that I am at 5 level and I can go on 4, my job becomes to bring me back into the 6 or 7 level. So you need to work on bringing yourself in a 6, 7 level. So only you know what you do. So you rate yourself early morning. Do some meditation, whatever is your routine. My routine is to go take shower. Doesn't matter if it's freezing or whatever, cold water, hot water. I need to take shower. Shower, coffee, meditation, prepare, do some mental rehearsal. And as a 30-minute pass, 35, 45 minutes, I feel I go up one notch. So I bring one notch up. Now, once I know how I feel, and I feel that I increase one notch, now maybe I'm ready to handle the market, maybe I'm not. So I'm aware of myself. So do the meditation for 5 minutes every day before the start of trading day, and also before you sleep. So go inside yourself. So this is what you do. Go inside yourself and rate yourself on the scale of 1 to 8. That is scale 1 to 8. If you're rating yourself 1 to 3, which is red, this is really bad. Like you are sick and you shouldn't be even thinking about trading, opening a new position. Your job becomes to survive that day. Somehow you need to get past that day, especially if it's a Friday. If you're rating 4 to 5, then you're average. And if you're rating 8, which is here, you are excellent. You had a great sleep, and you did everything correctly. Um, when you closed the loop and you went to bed, so everything is good, and whole night you went very perfectly. That's why you're rating 8. If your feeling score is 6 to 7, ideally, as a trader, for trading successfully, you need to be either 6 or 7. If you're 8, then it's good, but need to remind yourself that you are rating yourself at 8, and this is where you are bound to make the most mistake in your trading. Either when you rate yourself 8, or you rate somewhere in the scale of 1 to 4. If you're in 5, 6, or 7, you are in a safe zone. So think about that. So if you rate 6 to 7, which means good, you're rating good yourself, so then you can answer calm, like I can trade today, meaning I can open a new position. I will make proper judgment. A lot of things are thrown at me. If I'm rating 4, 5, then I shouldn't be opening a new position. And then even also not open a new position, that's one thing. But when I'm closing my existing position, whether at loss or at profit, I will make some mistake. I will give back some profit. I will my exit will not be right. That's what it is. My exit will not be right if I don't rate myself 6 to 7. So every day before we sleep, in order to wake up either 6, 7, or 8, we need to do something at nighttime in order to get the result of waking 6, 7, or 8. Now, if you rate 8, then physically you're good, but you become arrogant, you become cocky. Maybe last night or the day before you had a great time or made a lot of money. So now you're arrogant, cocky, and you cannot do anything wrong, and you don't follow your trading rules. You don't look at the market. You don't do your work properly, and that's where the result comes out, which is negative. So it's very important to do the thing, close the loop at night time properly, so you can open a new loop, which is in this zone, so you can trade properly. And then if you go back, you're doing all the self-analysis, you're doing the risk management, you have the skill for trading system, and you have to laser focus here in the middle. You know what kind of a strategy you will adopt. You're aware of yourself, and you know the market, the kind of market you have. You prepared the basket of stocks. You understand where they lie, what happened previously, and what you're looking for. And then constantly reminding that even though the market is up, there is an opportunity on the downside. Even the market is downside, there is an opportunity on the upside. So there's an opportunity on the downside and there's an opportunity on the upside. You need to be very agile. So when you do that, you're putting a proper bet, and you're constantly documenting your things in the trading journal, in your thoughts journal, in your emotion journal, in your mistake journal, and you're doing the debriefing, you're closing the loop properly. You're not assigning anything to the lady luck, because once you assign it to the luck, you close the door for learning. Once we assign the outcome to the luck, we close the door for learning. So you don't want to close the door for learning. Everything comes into improving the skill. So you do that. You are aware of all your beliefs, what beliefs you're bringing in, and you're aware of yourself, and you're performing self-analysis unconsciously all the time. You're being responsible, because if you're responsible, you will be more successful. You understand the cause and effect, so I explained in yesterday's session. And once you do that, then you have a mix. You can trade calls and you can trade puts at the same time, at the same market. One sector is going up, one sector is going down, and you're capitalizing on the move. You're not married to anything. Today you are long on this, next day you are short on the same stock. All right. So our job is to bring ourselves from yellow to blue, and then from blue to green, and then be on the top percent. All right. So I conclude today's session here, and I will have something for you this coming Sunday, or maybe early. All right. Thank you. See you. Bye.